Hello value investors, thank you for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. Today I want to talk about Coupang. Don't really even know how to pronounce this company. So this is a South Korean e-commerce company. It's kind of like the Amazon of South Korea. There's a lot here that's kind of interesting. There's a lot to be excited about. So we're going to talk about the good points, the bad points, and then we're going to talk about its valuation. So let's just kick right in, right? So they just reported Q2 21, and the top line adjusted for currency was up 57% year over year, and it's the 15th consecutive quarter of them growing at plus 50% year over year. So that's really strong, And they're talking about how if they look at their ability to cross-sell to customers, it's working really well. So you can see that active customers were up 26% year over year, but that the spending per customer was up 36% year over year. So it's, even though if you're getting a slightly less increase in customers, the spend per customer is really, really strong. So you got a table here that they put on the S1 filing when they went for the IPO, and it shows that the cohorts, not only do cohorts stick around longer over time, it also shows that the amount spent per cohort per time increases as the time increases. So you can see that, that probably resonates with you if you shop on Amazon or whatever, Alibaba or whatever, that it becomes your default engine. So this is really what Coupang is saying, that okay, at the local level, we're just dominating the amount of the market growth in e-commerce. Now the blemish here is that adjusted gross margins are only 18%. So it has expanded year over year, but at 18% of gross margins, you're not having a lot of wiggle room there to get profitability. What Coupang is saying is that it doesn't matter about the profitability right now, because what we had as adjusted EBITDA loss, it was really just because we were invested in what they call like Eats, like Uber Eats kind of, and their Fresh, which is their groceries segment. So they're saying that their actual mature business, which is e-commerce, is very close to break even. So this is some of the positive and the negatives. The other thing is that the stock is priced at approximately 3 times sales. Now, you can compare that to Amazon. Say Amazon is priced at 4 times sales, but remember that Amazon's market cap, a large point of that, is really driven by AWS. So if you want to take another probably like-for-like comparison, you can say JD.com. So JD.com is priced at approximately 0.8 times sales. So, JD.com might not be growing as fast as Coupang, but JD.com at least is free cash flow generative. So paying 3 times for an e-commerce is kind of like at the higher end. Also, then you have to think about the fact that this is really you investing overseas, so you want to pay a low multiple for that, because there is always a risk there. Investment sentiment can go both ways. So there are times when everyone is very much in love with investing in foreign companies. There are times when they're not. So you want to get that margin of safety. Anyway, there was a bit of a rushed video, but I just hope that it was able to put out the message. Don't forget to check out my marketplace called Deep Value Returns. I'll tell you the stocks I own and why, balanced argument for the stocks I own, and you're welcome to do a totally free trial. You cancel anytime before 14 days, and no harm, no foul. If you like it, you stick around, and if you don't, at least you tried. Okay, thank you for listening. See you soon. Bye.